Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader in XAUUSD. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of gold USD in front of us, and we saw a perfect bounce from our level of 2004, and we also saw a perfect reversal from the level of 2022 yesterday. So we got two perfect trades from our analysis. So now let's look at the chart of gold for Monday. So first of all, you can see here dollar gains as higher inflation expectations are hawkish for Fed policy. If we look at the chart of DXY, then we can see that finally DXY is out of the range. On Friday, they were not having a very good correlation, but still we cannot ignore DXY at all. If we look at the weekly chart of DXY, then we can see that finally DXY has formed a big bullish candle and engulfing candle, and there is a further upside possible on the chart of DXY. If the upside continues on temporary basis, 103.32 will be the next resistance. In case right after the market opening, if you see DXY coming down also, maybe it will be for some retracement, and there's a high chance that DXY will take support around the previous resistance and bounce again. So overall, it looks that we will get to see some upside on the chart of DXY. And now let's look at the chart of gold. So gold closed at 2011. This is the last traded price of gold here. So yesterday we saw a perfect bounce, so I will not suggest to buy again around the same level. First of all, I would like to take you to the weekly chart. On the weekly chart, my dear friend, you can see that gold is struggling to cross the resistance of 2070, 2080. This was the big resistance of gold, and gold, you can see that somehow trying its best but unable to cross it. So in the coming days, there is a possibility that we may get to see a big drop on the chart of gold. It is not a day trading. It is not a trading opportunity for day traders. Okay, it will be a big drop. Maybe it will be a trend reversal, and the drop will be should be of minimum 100 to 1000 to 1500 pips. Okay, so if the same thing continues, then there's a high chance that we will get to see a trend reversal on gold of at least 1000 to 1500 pips. Because if you look at the momentum here, you can see that we have a divergence. The market looks tired right now, so I'm expecting a big drop in the coming days. It may not be on Monday or Tuesday, but yes, in the coming days there can be a big drop that will last for a couple of days to couple of weeks. Now let's look at the chart of gold on the 4 hours time frame. As I've already mentioned in my earlier video, that 2000 to 1999 is an important level for gold, because if gold breaks 1999 level, we will get to see further downside. Because you can see here that we have support around this area here. Market support around 200 moving average. Here we have strong price rejection from below. If gold breaks this line here, you can see here that we do not have any immediate support. So as a result of which, if market breaks 1999, we can look for some sell. At least 60 to 70 pips should be in our pocket. Okay. And the ultimate support on the chart of gold is around 1970 to 1966 to 1970 is the ultimate support zone on the chart of gold. And the reason is, let me show you, we are using Fibonacci here. Okay, on the chart of gold, previously also we have seen that Fibonacci is working nicely, and moreover you can see here around Fibonacci 38.2% retracement level, we also have strong price rejection from below. So we have two factors to consider: 1970 to 1966 to be as a very strong support for gold. So on weekly chart, we have seen that in the coming days there can be a trend reversal, and for day traders on Monday you may find some selling opportunity below 1999 level if market breaks it, and ultimate support is around 1970 to 1966. On Monday, market may not head towards 1966 level, but you should it should be in your mind, it should be in your chart, because whenever market will break this level and head lower, you can expect a bounce and you can expect a buy position around this area as well. And my dear friends, before I proceed, I would like to mention that only 4 days left for my workshop, the world's most affordable forex trading workshop. The workshop has been designed for those people who are struggling with the market, not for complete beginners. I conduct a workshop in both Hindi and English language. You can see here I have mentioned everything in detail. It's a 3 days workshop, and the best part is that after the 3 days workshop, you will also receive support for 1 month. These are the benefits that you will be receiving from the workshop, and I have also shared my story so that you can understand that nothing is impossible in the market. And as I said, that workshop is only for those people who are struggling with the market, not for complete beginners. So there is a questionnaire so that you can understand that whether the workshop will be useful for you or not. And the price is okay, the price is the best part. You can see here it's only $15, only 1,000 rupees for 3 days workshop and 1 month support. The dates are mentioned here. If you're unable to attend the workshop, no need to worry, because you will also get the recording so that you can watch later. And my dear friend, if you're looking for a complete mentorship or guidance, then you can also sign up for the annual membership or semi-annual membership. Okay, so once you're done with the payment, just send a screenshot to the number below. That's all. Now let's look at the chart of gold again. So the market opening will be very, very important for gold. So right after the market opening, if you see that gold is going down, there can be a little bit of a risky selling opportunity below 2008 as well. Why risky? Because you can see that right now I am on the 15 minutes time frame. As we all know, higher time frame high reliability, lower time frame low reliability. 15 minutes is a low time frame. So on below 2008, yeah, after market opening, if you see market going down, you can take a sell below 2008. Now the question is why it is risky, because if market breaks this level here, it needs volume, and usually during the first half of Monday we do not get to see much volatility, we do not get to see much volume in the market. So as a result of which, there is a possibility of a false breakout or false breakdown. So you need to be careful. You can look for a profit of 25 to 30 pips. During the US session, when the market is volatile, then you can expect a good amount of fall. But when the market is not moving much, the fall will be much less. So be careful. So below 2008 also you can look for some selling opportunity, but you need to be very, very careful. 1999 seems to be a good level right now. Take a sell below. And on the other hand, if market starts moving up, then we have the level of 2025, okay, or 2024. Yesterday we had resistance around 2022 to 2024. This was the yesterday's resistance, but the resistance for Monday will be 2025 to 2024. If you're wondering why I'm saying this, then let me show you. If I take you to the 1 hour time frame, and if I again take the help of Fibonacci, you can see here around 2025 we have the 200 moving average, and we also have 50 Fibonacci 0.50 retracement level, and we also have the 100 moving average also around the area. So what I'm hoping is that when market will hit the level, there will be some sellers around the area and they will create some problem. If market shows price rejection from above, if market shows price rejection from above, market shows a shooting star kind of a pattern, bearish engulfing pattern, you will get the confirmation that okay, sellers are present, they are not allowing the market to go up, and you can take a sell position. Okay, so 2025 2024 is a resistance for Monday, but keep in mind that you need to have the confirmation first. In case market shows a good amount of upside, if market is standing at 2025 with a big green candle, then obviously you should avoid. Okay, because that's why confirmation is extremely important, because no level is permanent in the market. Okay, so as a result, capital protection should be our first priority. We cannot gamble with our money. So my dear friends, wait for the confirmation, then only trade. Be a trader, not a gambler. So these are the trading opportunities that I see on the chart of gold right now. Let's wait for the market opening. In case any new opportunity pops up, obviously we will discuss on Monday. So let's meet on Monday again. Bye bye, take care, and please follow proper risk management. As I always say, do not gamble with your hard-earned money. Bye bye, take care.